Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Unfair to go to Claudia Sahm here to continue this dialogue. We will. But for Dr. Sahm, she, of course, professionally digests two voluminous reports as well. Claudia, when I say go beneath the headline data, where does Claudia Sahm go beneath the headline data?
Well, I mean, the first place that I went to look, seeing the unemployment rate tick up, which is a tick, not anything to get too worked up about, but just to see what was happening with labor force participation, if that can kind of be the good reason to explain it away. And that doesn't seem to be what's going on there. So that is something to keep an eye on. We've seen the unemployment rate really flatten out. So it's a concern. But in general, I mean, it doesn't seem like a lot to react to here. So
you sound like somebody on the second floor of the Eccles building. You get to go into the room once a year. If you're a 28-year-old PhD newly minted at the Eccles building, what are you telling governors, presidents, and the chairman?
Well, if they were consensus, they can go in and say they nailed their forecast. I mean, really, getting something hard, like payrolls and going through the hurricanes and the strike, this is really more of an art than a science. And what they are trying to pull out of here is what is that underlying pace? Like, what's the 3-month change? How are things going? And really, it looks like we're kind of back where we were before hurricane. So, it seems to be giving a pretty consistent story of the slowing, but nothing real shocking here. See how
Dr. Sahm goes to the 3-month moving average. Yeah. I mentioned that an hour ago.
Yeah.
I mean, Paul, that's the way we roll.
That's the way we roll. And Tom, I'll just note the revisions from last month. We were at 12,000 was the reported number, revised up to 36,000, just to put that out there. Dr. Sahm here. So if I'm the Federal Reserve, I have to feel like I'm doing my job. I'm not even pat myself on the back.
That's
here.
That's a nice way of putting it.
Yeah. So do I cut rates in December, then just wait?
I think they've been doing this kind of look ahead, and this is very, I'm sure, consistent with where they thought the data were going to end up today, largely. And so they're on a path to have a cut in December to keep this pulling some restrictiveness out of the economy, doing it gradually. And I think this ought to support that. Now, the last roadblock to the December cut, which I think the Fed is very much on track to do, the last roadblock is next week's CPI. But even that, I mean, they've had a plan, they've articulated it.
Claudia, I've got to go. One final question to all the character of Michigan academics, and that is the study of inflation. Can we use our usual tools to study this modern inflation, or are we so overwhelmed by technology, its shift to productivity, that we can't measure inflation with the confidence that Ned Gramlich and company told us we could do?
Well, our statistics, the way we measure inflation or any other aspect of the economy, they're always evolving. Right. The Bureau of Labor Statistics is always bringing in new data, new tools. They're refining it. They don't, it's not the stuff of headlines, but we do have to keep up with the technology and the changes. And I think largely the U.S. statistical agencies do a good job. There's always more to do, but it does, it's fine to have more tools in the toolkit and that awareness. And we should have an awareness that no number that comes out, whether it is well crafted, is the truth. Right? These are estimates. This is our best estimate of what's going on.
Claudia, thank you so much. Claudia Sahm, New Century Advisors, all of her work at the Fed and, of course, of Michigan. As Paul mentioned this earlier, the revision is 12,000 up to 36,000. The sum 2-month total is 56,000. Positive revision. You add them together, 227 plus 56. I don't have the HP12C in front of me. I'm guessing 283 is a constructive number here to develop a 3-month moving average and to be thematic.
Yep.
That's a new word. We're thematic.
We're thematic.
Joining us now from Morgan Stanley, she's thematic.
She's writing a research note as we speak here, Tom.
She is. I mean, it's gifted. Thematic and macro investing. Sarah Wolfe joins us right now. That's my theme today. Forget about the noise. Grab a 3-month moving average. Is that what you're doing?
I'm looking at all the underlying details, and it's kind of just showing that the economy's in a solid place, and we're not going to see much market moving around this. We're going to look towards the CPI data, but the economy's chugging along. It's in a good place, so we don't need to put on more cuts for next year, and it's not so high that we need to take off cuts as well for December. If you look at the underlying trend, we're probably running at around 150,000 a month, which is a pretty good place to be right now for Powell.
I mean, I look at the wage number. Paul mentioned a tick better than we are. Do we have an inflation-adjusted real wage? Lisa Mateo questions that.
We're having real wage gains, that's for sure. If you get CPI data next week at 0.3%, then that's an increase in real average hourly earnings. That's one of the reasons why we see a little bit of improvement in low-income spending next year, because you're finally getting that real buying power back. Wages are now rising above inflation. We've been waiting for that to happen, and now we're starting to see it, and it's pretty sustainable.
Thanks to Eric from the back row here. Interest rate swap traders are citing an 82% chance of a rate cut at the Fed December 18th meeting. That's according to EJ. Markets Reporter.
It's the same study that's guessing where Juan Soto's going, right?
Yeah, please. Who knows? The highest dollar. So, Sarah, if I'm the Federal Reserve, I'm calling soft landing, right? I mean, I think we got to give these folks some credit here.
Yeah, well, if you look at the underlying details, it's even better than the headline, because you're not getting an extraordinary amount of strength in these holiday shopping categories, which is where I think markets were expecting there to be more strength. So retail trade was actually down 28,000 on the month. Transportation and warehousing was a mere 3,000, so we didn't really get that big upside. That means that you actually got a lot more breadth in payroll gains. So financial activities were strong, professional business services, more confidence in these white-collar jobs. And then we're still getting hiring at the lower end of the income distribution, education, health, leisure, and hospitality. So I do think that the breadth in the payroll print is notable.
She gets numbers that we don't get.
She gets it's
special
amazing.
Numbers, I don't know.
Just so let me translate this, folks. If you're at a fancy firm, a white shoe firm like Morgan Stanley, it's leisure and hospitality.
Right.
Here at Bloomberg Surveillance, it's bartenders.
Exactly.
Okay, continue.
So, Sarah, I mean, as we step back here, I mean, in 2025, how are you guys thinking about this U.S. economy? What's your GDP outlook? What's your inflation outlook? Are you constructive, or do you have some concerns out there?
Yeah, so first let me talk about the labor market for next year, because we're here right now.
Yep.
If we're getting tighter immigration policy, you could actually start to see that unemployment rate push down lower, right? Because you're removing labor supply from the economy, and wages could go a little bit higher. So it's going to be an interesting dynamic next year where payroll growth could be quite a bit softer because you have less population growth, somewhere to the tune of 50,000 to 100,000 a month. That looks weak compared to where we've been running the last couple of years, but that's still going to reflect a very tight labor market because it's coming from the supply side. On GDP growth, we have about 2% for GDP, so that's a slowdown from where we are this year. Nonetheless, there's a lot less downside risk, recessionary risk, right? There's policy risk, but we're moving away from the recession risk, and that's one of the reasons why markets could be a little bit more optimistic, even with weaker GDP growth.
On your commute across America, good morning, and thank you for joining Paul Sweeney and myself. Apple CarPlay, Android Auto, thank you. Sirius XM channel 121. They showed me those numbers 2 days ago. Wow, thank you for joining. On Sirius XM on the quarter, 99.1 FM Washington, up to Mount Katahdin. A little chilly today on Mount Katahdin.
I bet you.
I'll check Mount Washington here in a moment.
Okay.
See if we can do a hot toddy at the Mount Washington Hotel. Good morning, 92.9 FM in Boston as well. What do we have upcoming here? We got Sarah Wolfe with us right now. Kathy Jones will join us. And then very importantly, an extensive conversation with Lori Calvasina on this great bull market. She's killing it today. Small stocks, Russell's up 0.9% here, more volatile than the others. Sarah Wolfe from Morgan Stanley with us right now. Where's nominal GDP? Where's the animal spirits next year? Are you telling me we get a sustained 5%, or do we dip down a little bit? Not in the lethargy, but we just finally pull it back.
I think we could start the year around 5 or 6%, and then it's likely going to...
Did you say 6?
5 to 6%. I mean, if we're still getting GDP growth at 3%, I think there could be a little bit of upside in consumer spending in the beginning of the year. Think about the wealth effect. That's going to start to come through in early 2025. We've had a really significant rally in equities, and that's going to pass through into some consumer spending. And you get a little bit of a rebound in lower income households as well. And then I think we start to get a bit of that slowdown with immigration policy, with tariffs. And so markets need to be watching that slowdown that could start to hit the middle to the end of 2025. And I think that the fixed income markets are definitely aware of that. Equities seem to be a little bit more excited.
Did anything
See
change?
how she did that?
Well, I know.
She learned that from Mike Wilson.
Yes.
A little more excited is how you hedge that.
I know. Sarah, did anything change for you guys at Morgan Stanley from the economic and strategy standpoint? The day after the election, we now have a Republican president about to take office. The Congress, Republican, although maybe not as wavy as some people would think, but still a Republican-controlled Congress. Did that change your outlooks, your forecasts?
Yeah, our economics team definitely took up inflation a bit for next year, right? We had inflation coming down closer to 2% by the end of 2025. Now it's looking closer to 2.5% because you're getting that inflationary effect from tariffs. What that also means is that you have to take cuts off the table. Fed's not going to be able to cut that much next year. We have 3 cuts in our forecast. The Fed's likely going to have to take some cuts out of their forecast at the December summary of economic projections next week. And that's going to reflect higher inflation not only for this year, but they're also going to try to be modeling out the policies for next year in their own projections.
Right.
And it could lift up their expectations for inflation.
Tell me, one of the themes is we got a 3% GDP growth in China. Who knows? But the answer is it's a subdued Pacific Rim. You got NX off the back of the equation. When you say, here's our, as El Arian would say, here's our unknown unknowns, how unknown is the export dynamic globally, which, frankly, Morgan Stanley invented the analysis of?
I'll tell you what I'm watching the closest. It's what's going to happen with Mexico and Canada, because even though we have a lot of trade with China, we're way more exposed to Mexico and Canada. Our value chain, our supply chain is completely interlinked with these two economies. It's a quarter of U.S. trade to Mexico and Canada. 80% of exports from those two countries come to the U.S. So, of course, tariffs are being used as a negotiating tactic as we go into the USMCA, but if we really do see an increase in tariffs there, that's going to be something to watch, and that's going to really hurt U.S. manufacturing.
I mean, the uncertainty back end here is just amazing because you take, whatever the math is on net exports is a percentage of total GDP. The consumer gets all the attention.
Right.
But I'm sorry, NX is not a small matter.
It's not a small matter.
Get one more. Calvasina is waiting to come
I know.
Get one more.
One more for Sarah. We've got her in our studio here. So, Sarah, what's the headwind out there that maybe we're not thinking about? Maybe the market's not thinking about. Are you guys penciling out some concerns out there?
I would say the biggest headwind is that even though you're going to get an extension of the Tax Cut and Jobs Act, it's mostly going to be benefiting upper income households, right? And so you need to think about how much of that actually starts to pass through into stronger consumer spending. And I'm talking about 2026 now, right? A little bit further out on the outlook. Households tend to spend savings when you're that high income if you're getting $400,000 or above. So do we really get that much upside to economic activity?
In the old days, you don't remember this, C.J. Lawrence, Bear Stearns, David Malpass, John Riding, whatever. In the old days, people like you would model out 36 months. The only thing I can model out right now for 2026 is Ellen Zentner's going fly fishing somewhere. That's the only thing I know. Can you really go out even to July of next year with any confidence?
We have to talk about all the uncertainties, but what I could say is maybe a near-term uncertainty. We're getting University of Michigan at 10 a.m. We've started to get a little bit more data on business confidence as well. The hope, right, is that now that we're past the election, we can start to get some animal spirits from consumers, from businesses. They could start hiring again. The biggest worry right now is that hiring's been slowing down for 2 years now. Can that start to stabilize? That's what the Fed really wants to see, and how big of the election play.
That's brilliant. Sarah, I got to get this in one more question then. If hiring has been slowing down for 2 years, why do I have a sub 5% unemployment rate? And the answer is what? Immigration in the unknown?
I mean, layoffs have stayed really low. You're not seeing hiring come down and layoffs pick up as we normally do, right? People are still retaining their workers. There's this uncertainty effect that's weighing on hiring, but it's not so bad such that people need to start getting rid of their workers.
Sarah, thank you. Sarah Wolfe with us here this morning with Morgan Stanley. You can't say enough about what we've lined up here. The team, the interns aren't the same in December, Paul, as they are in the summer.
No. But
in the summer they're out there. They're the bar at Grand Central Station underneath the Park Avenue. I can't remember the name of that.
There's
bar.
not a bar I don't know there.
The kids in the summer are there. In the winter they're working. This is really great setup. Thank you, Sarah, so much. Sarah Wolfe with Morgan Stanley. Joining us now, and my theme for the end of the year is this great bull market. One of the charms of Lori Calvasina, you're never going to hear her say, go to cash. She is in the market. Lori, rip up the script going forward here into next year. Do you really finally see a shift to that once every 10 year small cap performance, or does Mag 7 still reign supreme?
Well, thanks for having me, Tom. And look, I unfortunately think that things are just going to stay choppy for a while. And if you look back to 2016, 2018, the early days of the first Trump administration, we had 3 distinct trades into small cap relative to large cap. They were short-lived. They were sort of fickle. They were really powerful while they lasted. They unwound really fast. And I do feel like we're set up for a choppy environment again. And that is with a big caveat, unless we can get a clearly hot economy. So I think the things you really need to see for small caps to embark on a longer term outperformance cycle, reacceleration in job growth. We just got a little bit of color on, how it's been decelerating for quite some time. You need to see things like ISM manufacturing. We're stuck at the bottom there. We need to really see that uplift. And we need hot GDP. GDP forecasts are trending at 2.0% for next year. You need something more like 2.6, 2.7 historically for small caps to really outperform, and we're just not there yet.
Lori, my good friend Jim Cramer over at the Death Star, and Jim would always say it's like baseball. 30% of the stocks are going to do well. 70% of the stocks are not going to do well. Which 30% of the stocks do I want to be in?
So look, I would say I still like financials at this point in time. And I know it's gotten uber consensus, and I think we really have to watch the valuations closely in the new year. But if we go back to that small cap part of the market, I do still see a lot of room for those to continue. And I do think we're only about halfway through an earnings revision recovery in banks. So I think you want to be selective here. In large cap, we just upgraded communication services. It's cheap. It's had good, solid earnings and revenue revision trends. And there's not really as much political, sort of relevance to that sector, frankly, in the next year. So I think you want to own different things in different parts of the market cap spectrum, but just be really, really, sort of focused on the individual stocks, focused on the individual industries. And I don't even necessarily think it's a Mag 7 versus everything else kind of market at this point.
I mean, what's important here, folks, is we've got a whole secret like CIA, espionage message system here that we go back and forth on. And I'm getting tidbits. Paul particularly is giving me information all the time. Gura never gives me information.
No,
I got nothing.
Nothing.
Gura's like, they're playing at the Grand Ole Opry. Thank you, David. I really needed that. You sent me a note the other day, Goldman Sachs at 600?
Yes. How about that?
Wow.
How about that? Our good friends over there at Goldman Sachs. Lori, when you're out there, I know you travel a lot visiting RBC clients all over the world. What's the pushback you get from clients about this market? Is it valuation? Is it just earnings fatigue? What kind of pushback do you get on maybe an optimistic call in the market?
So I would say this week, I've just been on the road the last couple of days. I sensed a lot of nervousness. I started polling clients, saying, are you bullish? Are you bearish? Are you, cautiously optimistic but cautious? And I think people were sort of in those latter two camps. I had a number of people say, look, the market's just going to keep trading up in the short term, but we're really worried about what happens, say in January or February. I had other clients who said, we think next year is going to be good, but we're sort of worried about, kind of trends in the second half of the year. So I think in general, what I'm sensing is nervousness on sentiment, how frothy it's become, sentiment, and positioning as well. And really a lot of concern about valuations, and also a lot of concern that we've pulled some of the tailwinds forward into the price. And so there's, probably near-term optimism, but overshadowed by longer-term concerns.
Lori, do managements have degrees of freedom to act? One of my arch themes, folks, is managements adapt and adjust way more than what the street thinks. Lori, does corporate management across all S&P sectors, do they still have wiggle room to adapt and to adjust to events that are handed to them?
So if you listen to what they've been saying since the election, and and I'll be honest, I haven't read the last few days worth of conference transcripts and earnings transcripts, but if I think back to the beginning of the week where my reading was current, they're still telling the story that they are, right? And so they're generally going back. There's tons and tons of questions on tariffs, and they're going back and they're saying, well, we managed through this very well. We've recalibrated supply chains, yada, yada, yada. And they said similar things after SVB, right? A totally different issue, but really emphasized their ability to sort of manage through a challenge. I think what I'm maybe concerned about on this tariff issue is that a lot of the commentary has been focused on, well, we've reduced our China footprint. Well, we don't have as much China exposure as we used to, and we've moved some things into Southeast Asia or Mexico. And to the extent that you think this tariff challenge is going to be different than the first one that we went through in 2018, 2019, it's not clear to me that companies have really figured out how to handle that yet. I would say the other thing is cost pressures seem to be coming back, and the tone on earnings has been a little bit more negative the last 2 quarters, and margin expectations are coming down on sell-side consensus estimates for next year. So I do wonder if we're starting to run out a little bit.
Paul, yada, yada, yada is CFA level 4. Miriam has that is boring or empty talk.
Oh, okay.
That just so you know, yada, for our international audience, we got to translate yada, yada, yada.
Sorry.
Hey, Lori, what screens well for you guys going into 2025 here? I mean, I don't want to be boring and just say I'm going to, like Tom Keene just own the Magnificent Seven and clip coupons. Right. What else are we doing here?
Look, I think if we sort of veer away right from the financials, which we all know about, and the comm services upgrade that we just had, I've been noodling over the energy sector as well, and we've kept an overweight on there. Hasn't worked out. But if we look into next year, it's still a very, very cheap sector. It's still an area where the policy mix seems more favorable in terms of potential tailwinds and headwinds in the year ahead. And one thing we're worried about with a lot of different sectors, frankly, is the impact of a stronger dollar on earnings revisions, and energy sensitivity is a bit lower there than other sectors. So that's another one we're sticking with. And I've actually found, sort of good interest in that call. We've also found good interest in our upgrade of comm services earlier this week. And I think, again, financials are consensus. Right. And as we dug into that, we've said, look, the capital markets names, the investment banks look a little pricey on our work. But if you look at the traditional banks, especially the smaller banks, insurance companies, there are pockets within financials that still have good valuation appeal. So I do think you want to be a bit more selective in the financials.
Lori, ample time. Thank you so much. Really appreciate it with RBC Capital Markets as well. This came in from someone, off YouTube live chat. The mimosas today. Are we having Tito's with the mimosas today?
Sure, that's how you roll.
Is that how we're rolling on Jobs Day?
Yeah, why not? Jobs Day. Let's have some fun here.
They have little cute, like golf stick things. They have little puppets that they put over the bottles now. They say Tito's. They're orange.
Do they? Okay. I'm
I don't
down
know
for
how
that.
I knew that.
I'll go for that.
Vet Bill likes Tito's.
Yes.
He's into Tito's. Joining us now, help me here, Bob. Do we have Ms. Jones on us? Kathy Jones joins us from Charles Schwab. Thank you, Kathy, for having us finish the hour here. Strong. I got a Jobs Day. I got a continued equity lift as well. This is the key thing with Schwab. What are we doing? Not what we're talking about, but Kathy Jones, what are Schwab high net worth individuals doing with their money?
Well, they're enjoying the ride right now because things have gone pretty well. In terms of fixed income, what we're saying is people are looking at some of these yields and saying, for that part of my portfolio, I like 5% plus, whether it's investment grade corporate bonds or, tax adjusted muni bonds, even treasuries are giving you a pretty decent yield. We're seeing a little bit of caution just because we don't know how far the Fed will go. But I do think people are looking at these yields and saying, okay, I'm a little more assured that these yields are, near the upper end of where we're going to be. So they're moving out a little bit on the curve.
So, Kathy, I can't help but notice. I look at my I-N-GO function, kind of gives you the returns for across fixed income. And boy, the high yield and leverage loan spaces, high 8%, 9% returns year to date. I'm surprised that part of the market's been so strong. How do you think about that part of the market these days?
Yeah, you've had really easy financing conditions. You've had rates coming down. Obviously, that's a tailwind. Have high coupons. That's a tailwind. And then what you've had in a lot of this is the private credit folks taking out the weaker players in the high yield market. So high yield market has change is evolving to be less junky than it has been in the past. And we've had a good economic environment and corporate earnings going up. So it's been a pretty good backdrop for riskier parts of the fixed income market, as it has been for the equity market. You know, high yield tends to be highly correlated with equities, so not too surprising there.
All right, so I guess the question is here for 2025, given the strong returns across fixed income, you know, again, green pretty much across most of the spaces here, where is there value in 2025 as you kind of think about the global fixed income space?
Yeah, I wouldn't say anything is a screaming, undervaluation at this stage of the game. Everything's pretty fairly valued, and you could argue that in some parts of the market, like corporate bonds, valuations are pretty rich because the yield spread versus treasuries are really, really tight. And I would say that that's true in high yield. You'd have to be sort of cautious there because everything's fine until it isn't in high yield, and then the spreads move. But we're also just focusing on the all-in yield, and buyers in fixed income usually buy for the income, and it's a pretty attractive level here. So I would just be cautious about going too far out the risk spectrum, particularly in high yield, but in general, the backdrop is still positive.
Kathy, thank you so much. Too short a visit. Let's do it longer next time. Kathy Jones with us of Charles Schwab.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
I want to go through the path here because I think it's important. If you're a kid in Brooklyn, and this is a few years back, and you're uncommonly brilliant, you just end up at Princeton University, and you do better than good, and there's a thing called summa cum laude. This is a few years ago. And then you wander through to the London School of Economics, and then you have the privilege of being advised at MIT by the giant of economic growth, Robert Solow. That is the path of Alan Blinder, the former vice chairman, joins us now. Honored that he could be with us today. Alan Blinder, what was the first day with Robert Solow like? What the intimidation factor of dealing with the giant of growth? What was that like at MIT?
It was a little bit odd because my first day with him was actually not in macroeconomics. He was teaching what they then called at MIT advanced economic theory. And he had got a bug in his head that what he should be doing is making urban economics more mathematical. So we started off with lectures on cities whose optimal shape was the same as a cigar. And he joked that was a model of Palo Alto. I still remember that.
Alan Blinder, do we have too much math now? Do you detect a model at the Eccles building post-pandemic, or are we making it up as we go?
I don't think so. Not in that building. Now, you might level that criticism at parts of academia, though. I think even there, that peaked or troughed, whatever you want to call it, a little while back. And economics is getting a bit more empirical again, which to me is a good thing. Not that we should jettison economic theory. It's a question of how big a slice of the pie economic theory should take compared to empirical economics. So I think that's improving. And inside the Fed, you don't see a lot of this highfalutin theory, let's call it. They have to be, by the nature of their jobs, more down to earth.
Professor, you recently had a piece in the Wall Street Journal talking about President-elect Trump's economic plan. There are concerns about some of the inflationary aspects to this plan, whether it's tariffs or cutting taxes. Can you give us your sense of kind of what we know now?
Yeah, well, we don't know anything now. I think we can make the best guess about tariffs because the president-elect has actually talked about numbers. And even though some of those numbers sound wild high compared to any sensible economic policy, we have come to learn from President-elect Trump's first term that maybe we should believe him. That just because he talks about 60% tariffs, and most economists would say that's completely crazy, we shouldn't dismiss the fact that he might do that. And he has, I think it was a huge mistake that Congress made, though you understand why. He has unilateral authority over that. You would think this is weird. The Constitution gives taxing authority, and that's what tariffs are, to the Congress. But the Congress has delegated that all the president has to do is say there's some kind of national emergency, which, of course, to Trump, there's three national emergencies every day. So he could actually do that. So we have some handle on the numbers. On the mass incarceration and deportation promises, I don't think he'll ever get 11 million. What he'll get in the first year or so, I have no idea. It depends on how draconian and thorough they are. You can imagine pretty horrible scenarios there, but it's really guesswork.
Alan Blinder, I look at Republican, and of course your support of John Kerry and Al Gore and others puts you on the left side of the debate, but I look at the nuances of the conservative debate on economics, and I see someone acutely responsible like Glenn Hubbard at Columbia University, and then I see others within the milieu, including with President-elect Trump, who are basically saying growth at any cost. What's the price of a growth at any cost strategy?
Well, I think there are several possible prices. First of all, in pursuit of a will-o'-the-wisp, you may do silly or crazy things. That's the first thing you worry about. Like, for example, just to give you one example, we're on Bloomberg after all, massive repeal of banking regulation. Sure, let's go back to 2007 or something like that. So there's that kind of a possible cost. And then the more obvious cost is the inflationary impact. If you just go full throttle on aggregate demand, for example, cutting taxes again on top, extending the previous Trump tax cuts and then cutting taxes again, you can start running into an inflationary problem unless, and this is the other big deal, the Fed steps in and stops it, and the president doesn't step in and stop the Fed somehow.
Professor, we had a pretty decent labor print here today, John, non-farm payroll. It seems like this labor economy, it just kind of continues month after month after month to kind of amaze a lot of investors here. Of you view the U.S. labor market?
As you asked the question, I'm smiling. I think it's great. It's beyond what any of us, I think, would have imagined, beyond in a good sense, what any of us could have imagined a year and a half ago or something like that. I look at this number that just came out as hitting par. Again, when I say hitting par, remember what the previous month was severely impacted by the strike and the storms. And so the jobs number was tiny. If you average the last month and this month now on the current BLS measurements, you're right on par. You're like at 130,000 a month. And this is not far from where we've been for a long time. And the unemployment rate's been close to 4.1, 4.2, 4, 3.9 for a very long time. I mean, this is fabulous. This really is.
Yeah. Alan Blinder, my good friend Adam Johnson, holding court over at Fox Biz with Maria. Adam's watching. He sends in a note. Can you ask Professor Blinder if there's going to be a 15th edition of your textbook? Where are we on Balma Blinder solo? I mean, are we going to get a new edition?
I can't answer that. We're on the 14th now, and there won't be a 15th edition. It's time to retire it. For your information, though you didn't ask this, it's implicit in the question. The first edition was published, wait for it, in 1979. It's been a long run. Talk about things that weren't expected. If you'd asked me in 1979, how long do you think this textbook will last? I don't know what I would have said, but it wouldn't have been the 14 editions.
One final question to the former vice chairman. Again, you've been associated with Democratic Party politics. How does the Democratic Party get back to the center of Scoop Jackson, the center of HHH? How do we get back there?
I think a lot of this is perception and some of it is policy. And of course, we're not going to be able to do much policy while we're in the minority. The perception and the policy are about the caring about and doing something for, let's just call it middle to lower middle class working people. It's ironic to me that the Democrats against the Republicans go back generations. There's never been a question of which was the party that cared more about ordinary working people. Never. Until now. And now there is. And the Republicans, in particular Donald Trump, have captured a lot of that support and vote. I think that those people are going to see what the second Trump administration collection of billionaires actually does with the policy levers and not be too happy. Certainly not believe that it was for them.
Alan Blinder, thank you so much. The former vice chairman of the Federal Reserve System, of course, definitive at Princeton University.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
A tour de force for Bloomberg News the last 2 or 3 days. Steve Carroll, still with us. Stephen Carroll, of course, leading all of our radio coverage out of London on YouTube as well. Thrilled that Stephen Carroll could brief us on this weekend. Stephen Carroll, President Macron will give a speech, a huge victory lap within the absolute catastrophe of government and politics in France. And then the Archbishop of Paris will knock on the door of Notre Dame. It will be emotional, won't it?
It will be emotional. It will be significant, not just for the 50 heads of state and government who are going to be attended, including Donald Trump, as you're going to mention, but also for the city of Paris. This is a part of the skyline that's been missing since 2019. Everyone remembers where they were when they heard the news or saw the smoke, as so many did. Neighbours of the area had to have buildings closed because of fears of asbestos spreading apart, all around this extremely beautiful area of central Paris. We've all gotten used to looking at the hoardings around the cathedral for the past 5 years. So you're talking about a moment where that area of the centre of Paris is being transformed, renewed. I don't know if you've seen the pictures of inside the cathedral, but it is really spectacular what they've done. Our colleagues on City Lab have written about it, and they're great pictures on the Bloomberg website as well.
So, Stephen, where are we in the restoration of the cathedral? Is it complete, or are we still a work in progress? Because some of the pictures I've seen are really extraordinary. I never thought they'd be able to get to this point in such a short period of time.
I mean, I think the thing that struck me about it is how much it doesn't look like it did before, because essentially during the restoration works they've been able to take down so many of the elements and clean them. I mean, 8,000 pipes in the organ taken down, cleaned, restored and put back in place. And I mean, Paris, like cities all around the world, have air pollution issues, and this has coloured the stone, it's coloured the tiles. You remember the long queues of people that go in and out of that cathedral every day. It's bright. It shines in parts. That's what people will be striking when we see the images from inside.
Stephen Carroll, not to be funny, what does Mr. Macron do Monday morning? I mean, after the emotion and drama of this weekend, what does Mr. Macron wake up to Monday?
Well, actually, the question we're asking now is whether or not Mr. Macron will have a right-hand man, will have a prime minister by Monday as well, because that's still what we're waiting for after this week's no confidence vote. He said in his address to the nation last night that he would name a new prime minister in the coming days. He's holding a range of meetings with political parties at the Elysee Palace today. So, I mean, he may wake up to say that there's a plan, things are back on track. We can be sure this is going to be a spectacular weekend where the eyes of the world will be on Paris. He'll be in his element, doing the glad handing of international leaders that we know he enjoys and does well. So the question will be whether the domestic political situation will look any brighter on Monday morning once they've gotten over this weekend of ceremony.
Stephen Carroll, folks, his people called me up last. They said, you're not selling Stephen good enough. Folks, across continental Europe,
solid.
They start Bloomberg Daybreak with the acclaimed Stephen Carroll in London, and they generate a podcast literally within 30 minutes.
Yep.
The numbers, Paul, It's McCraw listens to it. It's unbelievable. Stephen Carroll.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
The Lisa Mateo Hour. It is our newspaper segment, hugely acclaimed coast to coast. Lisa, what do you got on a Friday?
I have your favorite person in the world, Kim Kardashian, okay? Yeah. She wants to, you know how her Skims line did very well. Well, now she wants to reinvent ski wear. Yes, on the ski slope. She's teaming up with North Face to do it. A collaboration between Skims and North Face. Yeah, 14-piece collection, okay? Comes out this winter. You have beanies, you have leggings, fleece jackets, outerwear, all in the shapes of beige and brown, which is kind of weird because you never see that on ski slopes. You don't. You see like the bright colors. The bright colors. Yeah. So she's doing the beige and brown. Yep. But she actually is a big ski aficionado. She started when she was 2 years old. She's been skiing. Okay. So when she grew up, she said she used the clothes didn't fit right, so she used to cinch them and do all these things, break up the hem and shade them. So now she says she has created her own line. So it's Skims and North Face. I have to check it out. I'm going on a ski trip by Christmas.
Where are you going?
I'm not you, Sweeney. I go to Camelback. Okay?
Oh, I love I learned how to ski on Camelback. That is awesome.
Did you really?
Yeah, on the blue ice there. Yeah.
Yes. So I haven't checked the price of these, but they're coming out, this winter. So Kim Kardashian expanding her little empire there.
Is it basically like Lululemon that's warm?
Kind.
Lululemon that's warm.
That you can wear in the snow.
Yes, exactly.
There you go.
All right, very good. I'll check that out.
Okay, so we have that, right? We have the ski wear.
Yep.
But now we go to the men's side, okay? Do any of you have a rich guy jacket?
Matt Miller has a
not?
dozen of leather jackets that he wears to work. Everyone is different, and I just say, when I walk up to Matt Miller, what animal is that? Is it horse? Is it cow? Is it like kangaroo? He's got these, and they're not cheap. Each one of these are very expensive. But he seems to think they're the greatest thing.
So he may be interested in this, okay? So they're calling it, the rich guy jacket. But this one's a little different than the Matt Miller leather ones, okay? It's tailored. It's button-up designs. It has that little stand-up collar. Sophisticated, but, a little bit quite formal. It's made from cashmere. Some are custom versions by Hermes. Patch pockets. They also have, 4-figure price tags.
Wow.
So this may be out of Miller's league.
No, that's right in his wheelhouse.
It really?
Oh my goodness.
Can we go back to the previous story?
Yes.
I just got a photograph here of Miss Kardashian.
Oh, you did? In the ski wear.
She's not wearing that going down Prima Corniche at Vail.
It doesn't,
she's
doesn't
not,
look like
she's
it'll
not
keep
wearing
you so
that
warm.
on an expert slope at Vail.
She's a Camelback, probably.
She's a Camelback. Yeah, but apparently it keeps you warm. I don't know. Right. I would have to test it out for myself.
Very good.
Rich man jacket. I know, from Kardashians to rich man jackets. Okay, so now we've been hearing a lot in the news, right, about the NYPD offering rewards. You've heard this lately with the suspect who's suspected of killing United Healthcare boss Brian Thompson. So where do they get the money? And the New York Times actually has this good look into it. It's actually not the NYPD, but it's from this donor-funded New York City Police Foundation. And they've been doing these rewards since 1983. They covered more than $3 million in rewards over that time. And you've heard it, Crime Stoppers, right?
Yep.
You always hear that out and about. They have the tip line. They offer about $3,500 for information that leads to an indictment for a violent crime, but they upped the ante for Mr. Thompson. They upped it to $10,000. So that's what they have. But it was an interesting look at where the money comes from, how long it's been in effect, and how the money gets, the ante gets upped. As a crime goes on.
So I guess for some people, that'd be a big incentive to come forward, make a phone call, and say, "Hey, I know this guy, I've seen this guy," or whatever.
And we'll see, because now they do have, a face of the suspect, so you have a face picture out there.
This news story just highlighted how many cameras are around the city. You're just, I think you have to assume you're being photographed at all times.
We assume London's like that, and we're not, and maybe we're wrong.
Yeah, so we've seen lots of photographs.
You got one more for us?
I do. This is a big take story. I have to ask David Gurr about this, but he's our big take guy. The quest to turn human waste into a cancer treatment. Okay, this is actually happening. It's a pharmaceutical manufacturing center in southeast France. It's called Mat Pharma. And every few months they get this huge delivery of human, can I say poop? I don't know. Feces,
we say poo
matter?
in the Bloomberg Business Week story.
Oh,
that might be the
poo.
Approved,
okay.
The Bloomberg way approved.
But it's really precious because the raw ingredients is for this medical and treatment to improve the gut health. And what this company is a pioneer in is using that therapy to treat cancer. Okay. So all these donations are coming in, and they're being used for medical treatment to treat cancer. But they take the donations really seriously. I mean, it's more than when you're giving blood. You have to go through this entire process in order to be a donor.
Donor conditions are more stringent than they are for people giving blood.
Exactly.
So
medical examinations, blood draw, nasal swab, all that you have to go through in order to be a donor. But it's going to a good cause, so we'll see what happens.
YouTube live chat. Lisa, are you going to Costco this weekend?
Am I going to?
Is it busier when it's cold?
Kind of, because everybody's in that whole section where all the fleece stuff is.
Well, here's the question. Do you have your Christmas tree yet?
I do.
I'm going today. I think I'm going
You're going today, so we're going this weekend.
It's a charitable contribution.
I think this is a reasonable time to get your Christmas
tree.
So
you do the real tree?
Yes.
And you do the real tree?
Yeah, Francie Lacroix. I mean, she was out like a week ago.
That's too early.
And she has her kids carry her tree.
Yeah.
I have delivery.
Of course,
kids walking across London.
Yep, I know.
You know.
Going through the tube with the.
I do the fake tree.
Fake tree.
Oh, come on. You and Pharaoh, are you kidding me? That's un-American.
I do, so I don't have to vacuum.
Do you have the little light at the back end?
It's already lit up with
lights.
You just plug that sucker in and it's good to go.
Puts a couple bulbs on there and she's good to go.
I'm telling you.
Lisa Mateo of the Fake Tree, thank you for the newspapers.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.